Welcome to the Inside Housing Podcast, where we break down the housing process, real estate, and investing. Here we go. So I'm glad you could join me today.
Thank you for having me. Very excited to be here.
Yeah, I have. So I got to open up. So one of the things is, as a realtor, nobody told me how much I would have to know about lending. So I was really excited to have you on and just kind of dive into the lending process. So before we do that, why don't you tell me a little bit about who's Julie Thorpe and what do you do and how did you get into your role as a mortgage broker?
I came to Vermont in 2002, and I had left a corporate job in San Francisco. My husband and our children moved out here, and I was looking for something to do that was a little less demanding, oddly enough. So I opened up an in-home black and white baby photography business. Really? Yes, and my old Pentax, and developed the film and things like that. So interestingly enough, Gene Richards, the owner of Spruce Mortgage, was doing some work with my husband, and we started a great rapport, and I photographed his family, and being Gene, he picked me out of a crowd and said, "You'd be great at this." And so the rest is history. It took a lot of blood, sweat, and tears to get there, but my business grew as my children grew, and so 20 years later, I've learned a lot, and I really enjoy this profession. It's brought me a lot of joy.
So you didn't have like a financial background necessarily, kind of coming into it.
No, and it's interesting. I feel like my history with corporate America and being a director of operations, project management, that is probably one of the biggest parts of being a mortgage broker is just managing all of the bits and parts and pieces that are involved in getting that loan from pre-qualification to closing. And looking way back in the beginning of my career, it was customer service based, and that really is what sets me apart. Of course, I've had to learn all the aspects of the financial industry as I have moved along, but I have a great reputation, and I love doing what I do. And so it kind of goes to show this business is pretty welcoming to a lot of different people who may want to get into it.
So how do you get into like the licensure and all that to do it? It's just like any of sort of like real estate. You have to go and get your license. Is the same thing. You apply for your license, training.
Exactly. Yeah, you have to have a company to work with, and you have to go through getting your NMLS license, and I would suggest becoming a loan processor before you try to do that, just so that you can understand a little bit about the paperwork. When I started in the business, there was no licensure.
Really?
That came along, It came along after 2009, and I had to take my licensing exam about 6 years after I was a loan originator. So passed with flying colors, obviously. I had a lot of history in the business, but I could imagine it's pretty daunting just to start from scratch and not have any banking knowledge or history of finance. So,
and then for the record, what's your license number?
NMLS 92216.
All right, just want to make sure we got that in there.
And Spruce Mortgage is 49592.
There you go. All right, just cover all the bases.
Yeah, thank you.
So this is something I get until I got into the business of like real estate. The terms kind of confuse me a bit because you have mortgage broker, which sounds a lot like just broker, and then you have a lender. And the mortgage broker is like the in-between role, right? So how would you kind of define like mortgage broker?
Yeah, so I work with a number of different banks, and I check rates daily for my various clients that are looking to lock their rates. Mortgage brokers, kind of like a concierge throughout the process, specifically me. I mean, people deal directly with me from pre-qualification to closing. No 800 numbers, no hold times. They have my cell phone number 7 days a week. So brokers don't get paid until the loan closes. So it really does create a sense of dedication to the client. We are fiduciaries, which means that we have to look out for our borrower's best interests. Whereas when you go to a bank and let's just say your file gets denied, you have to take your whole file and go to a different lender or bank and apply. However, if that happens with me, I have various programs I can switch them over to. I have all their documents in-house. we can consider other programs that might work for them with a different lender. So it gives us flexibility.
So it gives you flexibility, but from like a client perspective, they are working with one mortgage broker who then has the ability to tap in and work with different lenders, correct?
Exactly, yep.
Okay, and so, because sometimes like, I hear this a lot, there's like a little bit of confusion, like, can I go directly to the bank and the lender, or if somebody's doing like, and we'll get into like VA and all that stuff, but it's you as a mortgage broker have the ability to access all of these. And then so how does that like help like the consumer experience?
Well, it's kind of like putting the pieces of a puzzle together. Someone comes to me and they tell me what they want, how much they have to put down. I review their credit score, and then I kind of give them the options that work best for them financially. If you go to a bank with that information, sometimes they don't offer, let's say some banks don't offer FHA, some banks don't offer VA. So they may not be getting the full spectrum of what's available. And that being said, some banks offer things that I haven't heard of, like we don't do reverse mortgages and we don't do home equity lines of credit. So
got it.
It's kind of really good to check with both. If we're talking about just educating buyers, it's always good to check with a bank and a mortgage broker.
Got it. So this is a big question I get, when is the best time to start working with a mortgage broker? Because it happens at different points in the process, but when ideally would someone need to get in contact with you for like, those lending services?
I think as soon as they start thinking about buying a house, that's really the beginning stages. I've worked with people for 2 or 3 years before they close.
So, and why is that? Because there's different. So one of the things I'll say is that a lot of times you'll get a buyer, right? And they'll be looking to buy something. They'll start thinking about it. And then the language that comes out is like, you need a pre-approval, right? So that's different than getting pre-qualified. So before you put an offer in, many times you need that pre-approval. So how does that like factor in?
Well, in the local Vermont market, it really doesn't, because our name at our company is very well respected, and they would rather accept a pre-qualification letter from us in a lot of cases than a large internet bank who writes a pre-approval. I've had people pre-approved that were not qualified. It all depends on the specific attention that the lender pays to that loan file, and sometimes at the upfront process. Pre-approvals are sent before an underwriter, but all of us at Spruce have been doing this for 20 years, and we know for the most part what underwriters are going to ask for. So the difference is we look at the initial loan file, we ask for W-2s and pay stubs just like an underwriter, but as a broker, we are not underwriters. And
so from your perspective, kind of moving to like the current market, so what are you seeing out there as you're working and getting people pre-qualified and pre-approval? How has that kind of changed over the last? Because I hear that for a lot of, especially like first-time home buyers and stuff, that it's difficult, and we always try to make the point, go figure out what your borrowing power is before we go shopping. So are you seeing that it's more difficult to get pre-approved or qualified for certain things, or is it just really case by case?
It's really case by case. There's a lot more cash out there right now in the form of gifts. For a while, there was a little bit more creativity of people purchasing homes together that may not have thought of that beforehand in years prior. Co-signers are common, non-occupant co-borrowers.
Okay.
And I think a lot of it is values of properties are pretty high right now. And I feel rates are at a really great spot. I don't think rates should be holding anyone back. When I got into this business, they were in the high 6s.
Okay. And
then I was spoiled for a very long time with, really, really great rates and historically low rates. And, now high 5s, low 6s, depending on credit score, depending on loan to value. I mean, those are really historically decent rates. So I don't feel like rates should be holding anyone back at this point. I usually ask borrowers right out of the gate what they want to make for a monthly payment, and then I work backwards to establish a purchase price, which is super helpful for people.
Okay.
So.
And you're there, you're sitting with a customer and you're working through their different, loan options. So what are some of the different kind of loan options that people have out there? Because one of the things that typically is, I hear a lot is, I need $100,000 down to afford a home. And I'm like, I don't know about that. I think there's some programs. So what are some of the bigger ones that people have available?
Well, if you're talking about not a lot to put into the transaction, there are options. U.S. rural development, if you're not looking to live in a highly populated area, which is basically most of Vermont is eligible.
Really?
RD, yeah.
Okay.
Unless you're looking in, Burlington, Essex Junction, some other more heavily populated areas. So if you're looking outside of those areas, rural development allows for 0% down. Okay. And then it gets very matrixy at this point, but we can combine that program with VHFA.
Oh, you can?
Which is, another program where if you qualify and you have less than $20,000 of your own assets, you can get seller assistance toward down payment and closing costs. Okay. So that's nice. That supplements. I am starting to see in the market a little more movement in seller contributions, which is nice because we can combine that with, let's say, rural development or VA, which are both 100% financing programs, and sometimes are able to have the buyer walk away with zero out of pocket, which can be.
And for somebody who didn't know, what is a seller contribution?
A seller contribution is something that the seller pays the buyer toward closing costs and prepaid items.
Yeah, and that's something.
That's part of the negotiation.
And so I've actually seen that myself, where a lot of times cash seems to be either they have a lot of cash and it's not an issue, and then you can sort of dictate the terms of the transaction, or they don't have a lot. And so I'm surprised at how often, especially buyer clients, they don't know that you can actually write in seller contribution into the deal. So you're seeing that a little bit more, and you can combine that. What else could they do to kind of keep those cash out of pockets low?
I mean, really, the programs that are out there right now for first-time home buyers are great. They're really trying to encourage that. 3% down through Freddie Mac, Home Possible, and Home Ready through Fannie Mae. As brokers, we have to give back what's left over in the market of the day to the borrower.
What do you mean?
It's
okay. That's why we're here.
Okay.
Explain it. Yeah.
In between each rate, there's something called a yield spread premium. And
okay.
As brokers, we're heavily regulated. We can only charge a certain amount. So let's say on a VA loan, the pricing in between has a half a point back toward closing costs. So sometimes we can raise the rate slightly to be able to offset some of the closing costs for the buyer. So we can play with all sorts of tools, that makes sense for the buyer in the long run.
Okay. So you got rural development, you said VHA?
VHFA. Yeah.
VHFA. What are some of the other types out there?
FHA. It's,
okay.
3.5% down. And those rates sometimes do come with large credits back toward buyers' closing costs should the buyer want to raise the rate a little bit. There's no such thing as a no closing cost loan, but the loan can be raised or the rate can be raised in order to offset some of those closing costs. So we work with people regularly to make sure that educate them as far as what the bottom line number is and what their monthly payment is and what the best program is for them. So as far as first-time homebuyers, those are the major ones that I would suggest. First, it's VHFA. We see if they meet income guidelines. Combined with 3% down, hopefully they can get a first-generation homebuyer grant. Or
what's a first-generation homebuyer grant?
Yeah, if you're a first-generation homebuyer, you can get funds toward closing down payment and closing costs.
What do you mean by first-generation?
Basically, you're the first person to purchase a home. Your parents don't own a home.
Got it. So, and do you see that quite a bit?
Not too often, but yes, it does come across my desk. I'm working on one now. So. All
right. So you have that. And then I know one of the other ones out there is VA.
Yes.
And I think that's kind of like I don't want to say specialized, but I know you know a lot about VA.
Yeah, I do. That's how you and I met.
Yeah, that's right.
I was on the board of Military Kids Vermont and did some events for Camp Johnson and the Air Guard, and I know a lot of the members over at both of those locations, and they're really great to work with. So, Yeah, VA is 100% financing. You have to have 6 years in the reserves or have served a certain number of days as active in order to be able to qualify. You pull your certificate of eligibility, or I can do that for you. And yeah, I love working with my veteran borrowers. They're great. They're on top of their paperwork.
Yeah, you know what? We have
That's
to.
number one.
We have to be.
Yeah,
right?
yeah.
You better know what your paperwork is.
Extremely responsive, like just some of my favorites. So.
And so one of the huge advantages for that loan type is the 100% down.
Yes.
Right.
Financing. Yep.
Are there any caveats? Right. So if someone is like, I think I qualify for VA loan type, what are some things that they would need to know?
Well, you don't want to make an offer on a fixer-upper. Government programs are pretty strict about property condition, much more so than conventional. So, again, we have to keep that in mind. If someone's looking in a lower price range with something that needs a lot of work, we couldn't really suggest a VA loan because they want to make sure that the veterans are protected 100% from any lead and peeling paint, any missing railings, any safety issues, or outdated electrical. Some of those items like peeling paint can slide on a conventional loan, but VA, RD, and FHA, they're going to make you fix them prior to closing, and there's no escrows due to weather-related items anymore.
And so that's something that I've seen, right, especially as I'm working with clients, is trying to help them match the loan type with the kind of houses that they can see. Because it's like you said, if you have too many things that need to be done, maybe it's going to knock off a certain lending type. And so that really helps. You know, I had a whole story where like the HOA made a potential purchase ineligible for it, right? Just little things like that.
Oh yeah, non-warrantable.
Yeah. So we see that quite a bit. So the big advantage is you have the 100% down. You have all these caveats. What are some things that you help the person working with the VA be able to like know about ahead of time?
Well, one thing with the VA is they don't charge monthly mortgage insurance, but they do charge an upfront funding fee that's rolled into the loan amount, and that's based on either subsequent use, which is pretty hefty. It's 3.3% of the loan amount, which can be sizable, rolled into your loan amount. But ultimately, compared with, let's say if they have a lower credit score range, compared with conventional, VA usually does come out ahead as far as savings for the borrower. But I do like to show those different numbers to the borrowers just to make sure they understand the difference between conventional and VA, the monthly mortgage insurance versus the upfront mortgage insurance, which is rolled into the loan amount. FHA and RD both have upfront mortgage insurance as well.
Okay.
It's an additional guarantee for allowing lower down payment programs.
All right. So you got your major lending types. Let's talk a little bit about cash. So what does cash really mean? Because the money has to be somewhere, has to come from somewhere. So is that just you have enough savings, you have the ability to pull from cash? Like how are you like defining that for terms of like paying for things?
Yeah, I mean, most programs require 30 days of bank statements.
Okay.
I would always caution to have 60 of seasoned funds. And basically that means any large deposits within those 30 to 60 days have to be verified. If you sold a boat, if you have to have a bill of sale, you have to have a copy of the check, you have to show that it was deposited, it has to match exactly. Gifts, we allow for gift funds really of any amount. So we need a gift letter. We need a copy of the gifter's bank statement, which is always fun.
Okay.
And then we need a copy of the recipient's bank statement showing the funds being deposited. So lots of paper trails. Sometimes I have people moving money out of retirement and they do, multiple transfers, and it's fine with me getting the docs, but sometimes it just drives them crazy because the bank statement rules are they're put in place to avoid money laundering. So it's a lot of explanations to people who transfer funds within that 30 days that they're going to have a little bit more of a headache, and seasoned funds for 60 days is always the way to go.
Okay.
If you can.
If you can.
We do gifts all the time. I mean, we transfer gifts all the time.
Because I've run into this before, like, because you can't just give people money, right? Aren't there certain stipulations and rules in terms of.
Well, you have to have a gift letter, which is a form letter that's filled out stating that there's no expectation of repayment. What happens on the accounting side of things, you always want to talk to your accountant before you give a large gift, and I'm not here to give tax advice. It's above my pay grade. So
yeah, mine too.
I'll let them do that. But I believe there's a maximum gift amount you can give over your lifetime. It doesn't come into play in my daily life. We have hundreds of thousands of dollars of gifts provided. If we should all be so lucky.
Yep. But. And so, it's interesting because I was looking at, I think it was a NAR stat for National Association of Realtors, and they were talking about, where some of the money's coming for, and gifts was a slightly less percentage, and digital assets were starting to become more into play. Have you seen any of that yet in terms of like people using digital assets?
Yeah. Bitcoin. Yeah. You mean crypto? Or
specifically Bitcoin. Like I know it's how, and it's the same thing.
As long as we can see the liquidation of funds and both statements and that they're clear and they're for 30 days with no gaps and any large deposits. Yeah, that's a long list, but
follow the same rules.
Yeah.
Okay. So you have your lending type. Somebody's either gotten a pre-qualification or a pre-approval. So now you get a place. You're under contract, right? That's what everybody wants. They want to be under contract. How would you explain the underwriting process to someone who doesn't know what that term means?
Yeah. So up front, personally, I try to prepare my buyers for everything I can think of the underwriter will ask for. Like if there is a large deposit on a bank statement that I see right up front, I'll say, hey, they're going to want verification of this large deposit. No problem. I transferred that. It was a gift from my parents, whatnot. So I really try to review the file up front. But normally we just ask for a borrower who's not self-employed, we ask for 2 years of W-2s and your most recent pay stubs covering 30 days. You fill out an application with a 2-year work history, and you provide bank statements showing. You don't have to show all the funds to close, but we have to kind of establish, what bank statements we're using, because our letters are written contingent on final verification of funds to close, simply because people are waiting on large deposits from gifts or transfers. And that's how we write our letters.
Okay. And then the magic words that everyone wants to hear is you get a clear to close. So what does that mean exactly?
Well, back to the beginning of the process, we submit the file to underwriting. They usually come back with a round or two of conditions, and then the title work comes in, which I've ordered. The insurance comes in. I've ordered the binder from your insurance company that you choose. And then, yes, hopefully we get the words clear to close, and that just means that the closing disclosure can go out and that all conditions of the loan have been met, and that's the best news I hear all day when I hear my clear to closes. So.
All right, yeah, because it's always the magic words that any realtor is like, do we have it? Do we have it? Clear to close? Okay, we got it.
Yeah.
So.
And we definitely try to meet. If I'm not clear to close by a financing contingency, which is rare, I always try to have it extended just to protect that borrower's deposit. If we're real estate deposit, if we're waiting on just something minor, I still have it extended.
Okay. And so there you are. So we walked through the process, pre-approved, found the place, gone through the underwriting process, clear to close, hopefully you close and you get your home. So rewinding back to the beginning, what are some things that, home buyers should be considering well before this process? Like what affects your ultimate ability to, basically your lending power, right? Like credit score is one that comes up quite a bit. People assume you need a good credit score, but there's other things too. So what are some of the bigger ones that you've probably just seen multiple times?
Cars.
Cars
can be a killer.
Really?
I've seen $1,800 car payments for people, and I don't know if it's
$1,800.
Yeah, they're getting up there too. $700 is not a rarity, and that can affect your ability to purchase. We go by how much debt you have versus your income, and a lot of programs let you go up to like a 49% debt to income ratio using your gross income, which is pretty high. as far as a debt to income ratio. And, debt can really affect your qualifying for a home. That's the number one thing. Debt.
So what are some of the big debt factors?
Student loans, cars.
Oh,
yeah, some of them. Yeah.
Are they all weighted the same?
In our process, yes. If it's a monthly payment on your credit report, it's counted.
Interesting. So cars. So that shocked me for a second. So cars are one of the bigger ones that you're seeing.
Well, I just think car payments are high. They have been historically, maybe in the last 5 years, 6 years. They've been kind of, you gotta sell a car if you want a house.
Okay.
It's thrown a few people for a loop. Yeah.
What about things like credit cards? Because that comes up all the time. I've heard that before.
Yeah.
Like someone will say, pay down this card, pay down that card. Is that one that, because it's out there in the news, right? That more and more credit card debt is out there. How are you seeing that in terms of affecting people's sort of buying power?
Well, it does affect the credit score. We do something through our credit pulling system where there's a report that generated that says pay this card down by this much and this, get yourself into a better position, and then doing a rapid rescore can raise the score in order to get a better rate or even to qualify. So, I mean, it is a factor. It's a case-by-case basis. I haven't seen a lot of it lately where I've had to, turn someone down because of excessive credit card payments. I usually see those people on the cash-out refi side when we kind of hit the reset button and help people do a cash-out refi and pay off all their credit card debt and move forward with a clean slate. Okay. That is a good tool for that.
And any other big things that sort of jump out in terms of, if I want to buy in a house next couple of years, so keep my payments low, save up, how much is saving cash on hand? Because a lot of people say that, like, I'm saving to buy a house. And I often go back to them and say, well, do you know what you need to save for? So what would be the best way to know what I even need to save? Really,
to talk to your lender representative, your mortgage broker, and just have them run numbers right up front. If they need to provide you with an estimated worksheet of closing costs, even on the initial conversation. I do it on every single conversation I have with someone. Ask them what they want their monthly payment to be, ask them if they have any funds to close.
Got it.
So it really depends on program, it depends on borrower, it depends on how much they've saved. But I would think, if you're a first-time home buyer, always call to get those initial numbers first. Always don't just assume that because you think you have too little in savings to purchase, that's the case.
It's very true.
Yeah.
So moving on, so you have first-time home buyers. What about sellers? So if you're selling and then buying, what are some things that can either make the process simpler or easier? Because we have that all the time, right? It's somebody is purchasing another home and it's contingent on the sale of their home. And so is that something that the underwriter looks at in terms of like those funds will be available?
Well, I mean, if we write a letter contingent on the sale of someone else's, of their home, of my buyer's home, then we do need to have that closed prior to closing if it's contingent on the sale, because usually they'll want the equity from that house to be able to put down on the one that they're purchasing. Lately, a lot of people have wanted to have that contingency not in the contract, so I just have to qualify them carrying both properties.
And I'm assuming that's just, it's harder to do, or it's really just, do they have enough assets and income to verify it?
Yeah, I mean, it depends. I have people who have no mortgage on the existing home, so I'm just debting them for taxes and insurance on that home.
Okay.
It really depends on the individual scenario.
Okay. And along those lines, if I'm trying to buy like a second property, or if I'm trying to invest in something, what are some things that I would need to know as an investor, or like loan types that I'm not eligible for?
Yeah, so the state of Vermont has really been trying to kind of ease the Airbnb short-term rental market here.
Not a fan of it.
By the lovely state transfer tax that they have imposed on non-seasonal second homes. So if it's a seasonal second home and it's a residential investment property with a little bit of a longer-term rental, the state transfer tax is still reasonable. It's 1.47 of the purchase price. But if you get into second homes, that jumps up and it's pretty hefty.
Yeah.
What they've done for primary borrowers is make that transfer tax a little more palatable. They've lowered it actually for people buying primary residences here. So you could see kind of the shift in what they're trying to accomplish. But that's something, I mean, that's something to know. I mean, I quoted 20 grand on a transfer tax on on a second home, and it's hefty. So, that's more dealt with in the state of Vermont. You have to file something stating that you're going to a landlord certificate, that you're going to be a longer term rental person, and then it's between you and the state of Vermont in that sense. We don't dictate that. We just quote the numbers as to what your intent is at the time of purchase.
Has there always been a state transfer tax?
Yeah, as far as I've been doing this.
And it just, and that, I don't think people realize that those additional taxes to second homes, a lot of times they're someone trying to buy a house for their kids, or they're someone who they want to move to a different part and keep their home, right? And maybe rent it out. And so I think I'm not a fan of increasing that tax. I think it's a difficult thing to do. So what are some of the big myths that you come across in terms of like lending and what it means to, work through that process?
Yeah, I mean, probably credit score is the big one, especially on programs like VA. It's not as credit sensitive. Start where you are, right? I mean, that's the people that I like to work with from the beginning. We work with their credit. We're not credit counselors, but we see a lot. And again, we like to kind of do a lot of hand holding as brokers and just educate our buyers to put them in the best position to be able to purchase. So another myth is like we just talked about, how much money you have to have saved in order to qualify for a primary purchase with seller contributions and credits back toward closing costs and, different programs. We can often have people leave the closing table with very little out of pocket if they qualify for something like that. Yeah, there are things in place. So
would you say, again, because you're not a realtor, you're not out there selling the homes, but you are managing the transactions once we're under contract and to close. What are you seeing? Are you seeing a lot of activity right now? Are you seeing it slowing down? Because, I talk to a lot of people and they're like, oh, we have a housing crisis. And I'm like, it's still busy out there. There's still a lot happening.
I mean, personally, I was a little slower last year, and part of that may have been slightly intentional. Okay. Because COVID was quite insane in our business during those years. And so I've been, was focusing more on myself and my art and my customers that I
you said your
would
art?
get. Yeah, I'm...
Art, you have to expand on that. What do you mean?
Like a nice counterbalance to what I do for a living. I crunch numbers and I do granny crafts. So I'm a fiber. I knit this sweater. I'm like a fiber artist and enjoy, knitting. It's very calming, and that's really great to see all the Olympians doing it now too. As far as just, it's coming back into, I guess, mental fashion for people to get involved in some of the more of the handcrafts, and maybe you haven't heard of it yet. Maybe you're not on the cutting edge of the knitter, but
my daughter knits.
Oh, so, she does. Yeah, it's so good for kids.
She's 8 and she just got into it, and so does that mean that if somebody goes and they're working with you as a mortgage broker, they get like a sweater?
Well, you can tell when rates are high because I have a different sweater every week. When rates drop, you all have the same sweater on. So
got it.
There's no time to knit.
That's the indication.
Yeah. Okay. Yeah. So and then I do some oil painting. I've just been kind of finding a little bit more work-life balance last year, but I'm back. This year has been very promising. I'm definitely back to levels that I used to do, so it's really nice. And I have some, great supportive realtors and work with a lot of people, and it's a very good start to the year. Very good. And I mean, like I said, rates historically, rates should not be holding really anyone back. It's more of just, the negotiations are getting easier. I think we're stepping more into a buyer's market. And like I said, I hadn't seen seller contributions in 3 years. Like, it was unheard of. And now I'm starting to see them again, and more negotiations. But there are still multiple offers too.
So one
it's
thing,
an interesting market.
it is, especially in Vermont. And
Yeah.
one thing I'm seeing is it's very county and like home specific. So homes that fit into that like ideal first time home buyer range, right? You're talking like your 300 to 400, maybe 500,000 in like that ideal market. Multiple offers. As soon as you expand out and either you're trading the home or distance, we tend to see more room for negotiations and stuff like that. So it does seem to be very much in pockets where it's almost like two different markets at the same time. So I thought that's been interesting. But like kind of back to rates, because I hear this all the time. I'll have friends that come up to me and say, I'm waiting for rates to go back down to 4% or whatever it is. Why would that not be a good strategy?
To wait?
To wait.
Well, because when that happens, there's going to be chaos. You may not get the house you want. I feel like if rates went into that realm, there would be a lot more multiple bidding offers than there are right now.
Okay.
You can refinance into the lower rate, but you can't always get the house you want.
Is refinancing easy?
It depends on the situation.
Well, easy, maybe it's the wrong word.
Easy.
How is refinancing sort of as an overall process work? I refinanced my home, so for me it was actually a relatively easy process. I just contacted and I said I would like to refinance. They sent me the paperwork. I didn't have to like do the whole process again.
Yeah.
So is that something that you would think is a better strategy in terms of...
Well, I'm just thinking back through my transactions. I'd say most of them are easy. Sometimes an appraiser goes out and they've been in the middle of pulling all the vinyl siding off the side of the house and forgot to mention it. So then it goes on hold until that work is completed. So, they don't like things that affect marketability. So for the most part, refinancing is similar to a purchase without all of the stress from the negotiation side.
Gotcha.
So it is a lot easier compared to when you're purchasing, because I think any purchaser knows it can be a nail biter and stressful, and as far as dealing with negotiations. So
what is the word in terms of rates? It seems like and nobody can necessarily predict, but I feel like we're in a better place overall this year.
I think we're in a better place overall this year. It's all going to depend. It all depends. And some of the projections I've heard are just saying that they're going to stay the same or get a little bit better. Yeah. But most are kind of saying, 3s and 4s are not something to be waiting for.
No, I don't. I think those would be interesting days if they ever came back. So you've been doing this for, you said 10, 20 years?
20 years.
20 years.
Spruce, yeah.
What do you enjoy most about sort of your role in this process, the helping people with lending? Because you're advising people, you're helping first-time home buyers, you're helping all sorts of different people. So what's the thing you enjoy most about it?
Well, I think that's maybe why you and I vibe. It's not transaction related, it's people related. So I do feel like that's just doing a great job for people gets me going. I love making them happy. I love really working hard for the best rate they can get, and just working with people. That's first-time home buyers. I have a little soft spot in my heart for them, just because they're so open to the process, and they just, they have. It's the education side of it that I really enjoy.
And you've also been quite active in the community. You host the Get Air event.
I used to do that, yes. Yeah. Did that for quite a number of years for military families. Just various things that I did for the military through Military Kids Vermont. I was a mentor for Spectrum Youth and Family Services. Always, doing the Knit for Food. I gotta put a shout out for the Knit for Food. It's going on right now.
What's a Knit for Food?
They raised over $500,000 last year for food insecurity. And,
really?
Yeah, you just knit for 12 hours and take donations.
Wow.
That's we're out there throughout history.
Is that happening again this year?
It is, yeah. I'll send you an email on it.
Okay, all right. For food, I can't do
Yeah.
it, but I'll bring my daughter. I'll see if she can make 12 hours.
Yeah, have her, she'd probably get a lot of donations.
And I always like to ask this, so what's some of the most, memorable parts about this? Or is it just at the end of the day sort of being able to, provide for the family and that work-life balance? And, what's something that you kind of look back and you say?
Yeah, I mean, it is a very, when you can take kind of a blown apart situation, especially mid-transaction, and make it work, that's extremely rewarding. Like, bring it from the ashes to the phoenix, like 2 days before closing. We have people who go out and buy boats mid-transaction. It makes it exciting, I'll tell you that. But, it's very rewarding. It is a rewarding and very unpredictable. You've got to stay on top of your, game at all times. And it's a 7-day a week, 24/7. I, talk to people at 9 o'clock at night and 6 a.m. on a Sunday if they're making an offer. It's just what I do. Just
like realtors, you're on vacation, the phone's out.
Oh gosh, there's no, no vacation. But it grew with my children, this job. So I would suggest, it's just nice because you can kind of you can learn while you're raising kids and grow through that. And then your business is there for you when they take off, because they're going to take off. Okay. So, yeah.
Well, Julie, I really appreciate you coming in, and I just want to thank you. I think there's a lot of just great information in terms of being able to understand the process. Yeah. And glad you could make it.
Well, I appreciate you having me. This was out of my comfort zone. Like I said, numbers cruncher, introvert, but I did it.
No, but you're...
we did it.
The communication piece, and I will just say that is, all business becomes a people business.
Yeah.
And so you're great at that. So thank you very much for coming in.
Thank you for having me.
Appreciate it.